All right, guys, so onto the USDCAD. Let's see what's happened today. So the open, we opened at the resistance again over here on the 4 hourly, the 4-hour resistance taken from the bodies. Market pulled back, came back below the region, and look where we came into. 1.3350, we stabbed into that region. We were below it, we made lows 15 pips below, and we came swiftly back above. So what we can see is, if we were to copy and paste that line and bring it to the bodies of the 4-hour candles, I'm going from these ones here and these ones here. I could probably extend over to there as well. We can clearly see that we had a pin touch into the supportive zone and then a pin touch into the supportive zone there. So more or less broke that range up into near enough a mid-range on that one. From there onward, what we see is we can go into, the break above, and then we can see that the trade carried itself. So over here on the hourly, where we had the indecisive candlestick, where we stabbed into the supportive region, market began to pull back up. Over here, moving averages crossed back over. Moving averages crossed back over here as well on the hourly, and we also broke above the MAs, and we were guided by the moving average for quite some time. A good few hours here, as you can see, before the market rocketed to the upside. So if we go into the daily time frame, dollar Canada, as you can see, yesterday we pulled back again, but look at this. Look at all these spikes to the downside. Boom, 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 boom. Now I believe that we have cleared officially. We have officially cleared the zone. Let's bring that in. And we're potentially now, I believe that the Fibonacci, okay, because remember we had 2 Fibonaccis. Now this is something that we need to be aware of. The fib from A to B, look, we're bang at the 61.8 again, so we have to be careful here. We have to be careful in how we treat USDCAD at the moment. We can come all the way into anywhere in between the 61 and 78 if the market is going to rebound and sell off, because we still do have time for the market to sell off. This is a structural at the moment. I believe that after this consolidation, so we have 1, 2, 3, I'm looking at highs being formed, but just to keep it nice and clean and simple, we're looking at the market being pushed into this region, which we had on previously anyway. As you can see, and moving averages, if I remove the candlesticks, we can see the moving averages are converged to the upside. Last week, again, what we need to consider here is the last weekly candlestick. We spiked into the moving average. Moving averages are converged to the upside, bullish engulfing. Now we've tapped back into the region, the range. We've tapped into the moving average there as well. If I was to remove, okay, I can't. What is that box? No, there's the wick, sorry. The wick comes down, the wick penetrates the region and also penetrates the 8 moving average on the back end of the green candle there. And now we can see I'm looking at upside movement, dollar strength coming through. So we're more or less playing in with how the week closed last week. And after all of this choppy consolidation and all of this mess, can it now be time for USDCAD to break out into new highs, new territory? But again, we need to be aware and we need to be careful of 1.3450, anywhere around here, because we can maybe sell off. So interesting. Let's see how this one plays out for the remainder of the week. If we do make a new high and then we come back and we start to trade below this, we're below this area now. We need the market to break through, retest it, and we need to stay above that zone on the daily and the 4 hourly for us to continue to the upside. Alternatively, if we break above it and then get whipped back down below, we can experience a sell-off. So let's see how this one performs, and let's see where price action leads next. Let's catch up with the USDCAD. Excuse me. So upside movement. Guess what? We did smash through the region, so it was worth actually keeping that on there. That level that's just been moved is playing up at the moment. I'm not sure exactly what it is. Maybe my mouse. But where the crosshair is, the 4 hour region all the way across here was taken out. Moving averages crossed over just beforehand as we rebounded from these lows into the upside, into the higher time frame momentum. which was the day. As you can see, daily, huge bullish engulfing after a lot of choppiness, a lot of mess. Moving averages gave us a clue just beforehand as the market started to push the momentum to the bullish side, and then the daily was relatively strong there. Next day, clear follow through, and let's go into USDCAD to see what we are going to do next. So I'm actually in a trade on USDCAD. I entered this just a couple of hours ago, and I'll tell you why. Number one, because we have 1.3550 just there, and the market spiked through that level yesterday, closed below, around 10-11 pips below. Today, we retest it for a second time, 3,500, spiked to the upside down. And then what we can also see is the 4-hourly. What's important here is that, let's look at this candlestick on the 4-hour right here. This one where we actually remained above the moving averages, broke all the way through our region, made the new highs. Because if you zoom out, you can see new highs had been formed past these ones right here. Overall, though, we did say that the weekly, we do have some scope to maybe 3,650. We could be attracted to that next level. It depends on the weekly closure. Is the week going to close above and beyond this level right here and the zone, or is it going to sink back below? I'm taking I could state, that it is more or less kind of counter trend at the moment to the grand scheme of what I do believe may happen on USDCAD, but I still think I'm in for a decent risk reward setup. So what I've done over here on the 4-hourly, focusing on this candle, sorry to go off track, but focusing on this candle over here, from the highs down to the body, bringing it across, we've kind of made a peak high, 1.3520, come back to the downside, and the momentum just pushed us slightly tad higher. Now what we can do here is we can use this 4-hour tactic of grabbing the trend line tool. We can maybe look where two bodies are. Sorry about the noise outside. So we've got one body. So I'm going to take that region across there. I'm going to copy and paste this, and I'm going to bring it down to body just there. To box that off, just so we can clearly see what's going on, which is that. Now, what we can see here on USDCAD is we have the two bodies and then the two bodies. So the bottom end intraday support is 1.3492, higher end is 1.3504. We consolidated for some time, and now we're looking to maybe break out of this box region. What will also be helpful here is that from the wick on the previous candle, if this body of the candlestick now closes back below and takes out that low of the previous, it can tell us that the momentum has now found its path and is ready to maybe shift. If we line this up with the hourly over here too, so let me just duplicate this level onto the hour. Now that's what it's looking like on the hourly. Sorry, that's a 30-minute. The hourly right here, I believe USDCAD can give me maybe around 30 to 40 pips back into the zone, maybe even lower if USDCAD does want to reverse. The risk reward on this trade is pretty decent, and that is why I did take it. So what I'm looking for, I don't know why does this keep happening? What I'm looking for is over here, right? The market on the hourly has broke back. Look at it's thrown spikes to the high. We've got the MA crossover to the downside, and it's broken below the support zone. The support zone taken from the two bodies. Now, what I'm expecting is a retest perhaps, and then the market to continue to fall. Now, if I was to use a risk reward tool and put on a short position in this case, because what we're doing, we're trying to find where the liquidity has been taken, i.e. at the top of this spike, it's gone up for it once more. It's left one spike, two spikes just here, and now the market's starting to roll back around. So then we can translate what's going on the 4-hourly. So we see 1, 2, 3 spikes. Translating that into the hourly time frame, we can see that we have spike, spike, spike. We have the resistance there. I'm going to put the stop loss just above the resistance, okay? 3 to 5 pips above, and a risk reward ratio, so that's 13 pips. I'm going to go for around 35 on this trade in particular. Again, it's a nice little intraday trade. We simply took it because we recognized what's happened on the high time frame, i.e. the 4-hourly, the liquidity had been taken, and now what we're looking to do is watch USDCAD potentially roll over. If USDCAD does melt into tomorrow and close back below the region and the 4-hourly ray right here, that may suggest a weekly closure. So let's wait and see if this can roll over. Again, I'm only risking what, 13 to 15 pips, go for 36. Nice little intraday move there. 30-minute time frame. Got the crossover just before 2, throwing some spikes to the upside. So when it's throwing the spikes to the upside, it's telling us that the momentum hasn't held very well. Now we broke through. We've had a little retest on the back end of, if you can see, not the candle that's currently open, but the one previously. It has retested that zone. Market is pretty late now. It's going to be the daily closure soon, so I'm going to leave this one on and see how this performs.